Alrighty, so this is going to be a little scan for the week, a little bit of a May recap to some extent, and just my outlook for the month of June overall, and what I kind of see coming into play, short side, and the timing aspect of this as well. So the month of May has been, I basically broke even the month of May, right? That's completely acceptable for me on an options portfolio, more or less. I would have liked to been green. I had a couple good trades, but the opportunities were very limited this month in terms of exposure leverage wise that I'm really fond of. After such an extensive, right, after such a notable footprint, right, such a notable signal bar, right, such a notable cause built out, 20+% from the highs, 22% from the highs, um, and a large changing of hands, especially after a notable distribution. You're bound to have a reversion, right? You're gonna have a reversion. And the opportunities were there to take exposure, right? We had the preliminary signs, we had the short-sided trade kind of ending in March, the kind of continuation higher into this gap, into March OPEX, right, and then the exhaustive gap into that window of weakness where that seller pins us under the previous floor from quarter one. And this is not necessarily anything built out that's going to mark us up even higher to new highs, and you can kind of see that with the way that the structure looks and the volume and the way that a lot of names look as well in that window in March, into March OPEX, and then the continued or the exhaustion that occurred and the very small spread, low volume print the 25th, and the correlation with NVDA and banks and tech and a lot of names that looks relatively weak that day. And then you get the breakdown lower, right? And we come into the week of the 31st, we see the new low established very minimally, right? You obviously have a bidder at these lows. You get the continuation higher, but the gaps we're always gapping down. We didn't have a gap up since that March 24th new week opening gap. And a notable kind of seller at this lower high pocket from the sell that occurred that week, right, into the May 31st low and that lower high territory. So it's at that point in March, it's a notable sequence that's kind of giving you the signal that the short-sided trade is becoming less vulnerable, but it's one of those things that to get a real meaningful reversal, I'd like to see a more meaningful changing of the hands to spark that rally higher, and then you'd want to see the same thing as well, personally, because I feel like the cause built out through the entirety of quarter four, potentially in quarter two, quarter three of 2024 is very mature, and there's just a lot of things. After such an extensive rally, there's money that rotates, and there's money that's leaving equities, and a lot of names that have made extensive moves off of 2022 or 2023 lows, right? That money's gonna leave, right, and they're gonna use these events like the election to offload their inventory for a profit, right? They've ridden this 75% from the 2022 lows, right, and 60-something% from the October 23 lows. You're gonna have money begin to rotate out, right? It's simply how these things work. And we get the extensive move, we see the preliminary signs of a buyer, and then the massive changing of hands that, maybe in a longer term perspective, more than likely the tariffs are not going to be a good thing for equities and maybe for the economy. I don't know. Obviously, it's going to increase costs, but bring in more money. So, one versus the other, we'll see. But there's a massive liquidation that occurs off of that news. And, this is the opportunity where you have a snapback rally, right? Regardless of whether those tariffs are going to be good or not for the equity market, you have a clear, notable kind of changing of hands, right? You have a clear, notable sign that there's a lot of selling going on here, and it's already coming after an extensive move from February highs. And when the hands change, especially on the bad news like this, right, when all that selling happens, there's going to be a party that's bidding this up. There's going to be a snapback rally. It's just inevitable, and the timing aspect is very pivotal. And that's exactly what we get. The entirety of April 4th was bidders at the low on notable volume, sellers getting trapped. And then the market we really don't bottom on Fridays. I think it's just a lot of the, over the weekend speculation, and a lot of the sellers over the weekend. We had futures gapping down. We had peak negative news down here. We had, bear market news, 12, 15% move in 3 days from the April 2nd closure to the April 4th open, right? We have everybody fearful there. And then we get the kind of gap down rally off of that, quote unquote fake news, but very significant sign of a larger bidder down here. And kind of your signal that, okay, anything can kind of catalyze this markup here. It's just a matter of time. And this is also that window into April flows that the timing aspect is there as well, where you have the Vanna charm flows returning, especially in a sequence like this. You're going to get movement under the hood that props this up, right? That's going to rally this higher. And that's exactly what you get, right? We have the, 5% reversion intraday, the failure within this gap where they started to accumulate it. The first gap up in 10 trading sessions on the 8th, and then the low volume kind of consolidation, giving you that look that, there's not an aggressiveness behind the seller on the 4th, right? And the intraday move as well was very notably bidding of the lows and reaccumulating this, waiting for that news to kind of occur to mark this up. And we even bid the opening print from that week of the 7th as well. So, and closed above it on the daily perspective. So this was really just a matter of time. We had CPI on Thursday, and that's kind of my opinion on what I thought would be the opportunity. We had volatility relatively high, so it was a little bit more difficult on an options perspective, in my opinion, to capitalize on this. Shares worked beautifully, right? You can definitely spot the opportunity on shares, on equity, and you can definitely spot the opportunity on leveraged ETFs and options exposure. But with volatility, up at 60 on the open on the 4th or on the 7th, that's going to give you a significant vol crush, especially when we rally higher, and deteriorate your contract significantly. But nonetheless, we see the gap down on the 9th, and then we see that midday news, right? The consolidation that occurred was very notable, that there was not a lot of aggressiveness or effort from sellers, and we were more or less just waiting. And I did think CPI could be the catalyst, but we got the 10% intraday move, and then the subsequent digestion after, right? And when you have, 8 inside days, the majority of these, right, there's a bidder on April 10th that you see the strong closure, the hold of the progression gap, and then the nice pop on the 11th, the new week opening gap, and then the continued bidding the week of the 14th, the short week with that Good Friday. That's a good time for, there's not a lot of liquidity. There's a significantly drier auction on a week like that. We had VIX expiration. We had options expiration. And the options expiration, normally it's going to be something that, introduces you into the window of weakness where those flows are no longer propping us up, but it can also unpin the volatility and make a move to the upside, right? It's more or less just pinning a volatility that comes off the table and can mark up a significant move. And that's exactly what happens, right? We obviously have the gap down to begin the 21st. They continue to bid this lower. They hold the August 5th print. There's a large buyer down here intraday, the relatively stronger close, and then that good news starts catalyzing the markup, right? We had the gap up this day, the reclaiming of these internal lows. QQQ bid that progression gap at 438, right? Just a sweep, collection of inventory, changing of hands that's going to spark that rally. And a draw to an area where there's a larger amount of demand and liquidity in terms of the internal low. And then you see the continuation higher. You see the path of least resistance on the intraday move here, where you have a notable seller, but not a lot of aggressiveness, right? More or less just a sign of a seller. But they're absorbing this range, right? There's a large campaign built out, and there's a large amount of supply wipes from here, and the draw is going to be higher, right? When you have such a significant move and a significant footprint, and then the subsequent consolidation and digestion of such a significant candle, and sequence overall, right? It's just notably telling you that we're going to draw higher to the gaps above, especially when they started to accumulate this down here. And that's exactly what you get, right? And so I come into the month of May. I traded long on the 7th on some options, and then I traded long on the 9th on leveraged ETF exposure. I was building out June's here, looking for that push up to 536. I did think that could happen, but I ended up cutting them for about a 14% loss on Tuesday. I didn't really want to swing those with volatility so high. I thought that my contracts could kind of get crushed, and I was actually incorrect on that. Nonetheless, great learning experience here, right? I compare this to the August 5th footprint where you had the rally from April to June and July. You had the continuation lower, and then you had that Friday, August 2nd gap down where they start to change hands, and then the flows return on the 5th, and the massive footprint, and the reversal higher, and then, this was a meaningful print, and I failed to understand the relevance of such a sequence, right, and I wasn't really able to comprehend the meaning behind the August 5th print, the quick markdown, the bidder in this gap, the rally and the higher low, and more or less just where a lot of charts were on August 5th, right, just where a lot of names were at. And then in the subsequent higher low that we got in the September flows, just where a lot of names were at, where a lot of charts were at, and the meaning behind this candle into the quarter four flows and the end of year flows. I wasn't able to understand that. And it was a great lesson because when we come over here, I was able to, not only not be on the wrong side of the trade, trying to bid the longs into this Liberation Day event, but I was able to capitalize long here and here, right? We get the digestion. And my thing is, I kind of chose a poor vehicle on Monday in Macy's. Very stupid decision of mine. And then it's just kind of a lockout rally, right? And all it really is here is just riding out your longs throughout the entirety of May. We had a 6% month, but riding out the longs for the entirety of May. And, I did short here when we kind of see the exhaustion, see the micro distribution, see that volume kind of fizzle out, the spreads get relatively small. The seller showing his hand into the April 2nd gap on Qs. But you had the quick mark down, the reclaim of 466, and a very strong candle closer on that GDP print, and the same concept on the 545. The break and base of the previously absorbed resistance turned support. I was looking short. We were still in that window of weakness. The flows returned on the 2nd for the May expiration, which was a very call-heavy expiration, a very heavily skewed expiration, and that's part of the reason why we continue to get this float, in my opinion, besides the notable signal bar off the lows. The flow is propping us up, right? That's a very big factor, and a lot of people ignore that. We had a very skewed an anomaly in the options chain for the amount of call buying down here, and I was waiting to get long into that window, right? I was waiting for some of these gaps to be filled. I was waiting to see if we could get a pullback into this range, and then I could slam the longs once more into that 564 window. We never really got there, right? We see the quick GDP gap down, and then we see the gap up, right? I'm not bidding this into Microsoft and Meta reports. I was on the lookout for that. I was short, but I was patiently short. And then we see the continuation higher, and it's just like, ever since then, it's been a little bit difficult options wise, right? It's been just waiting patiently, and that's kind of what I like to specialize in, is waiting for those moves that develop on such a beautiful timing aspect, and correlate with a lot of names and potentially some data sets, and then execute, right? And that's what I did with the long down here, and that's what I'm waiting on the short up here, right? So, this week I hardly did much as far as May goes. I attempted some shorts, ended up breaking even, right? And then we see the distribution on the 8th, the subsequent inside bar. I didn't really do anything this day. I caught a decent little short, but it just, this day I wanted to execute at 564, see if we could pull back to the gap fill. We never got it, right? I profited on like 2/3, stopped out on the rest. Same thing here. It's just been waiting, right? And the higher that we traded, the higher that we traded, and the lack of structure, harmony in terms of volume and price action, and the sentiment and the timing, the more appealing and notable the short side becomes for me, right? We see the gap up to begin the week of the 12th, 5% or 4% day on Qs, 3% day on SPY. And that's kind of your signal that this is exhausting itself. This is ending, right? This is off of China news that wasn't really news. And you notice how down here all that bad news comes in, we get the reversion trade V upside. It's poetry in motion. It's something that's inevitable. they need those counterparty fills. They need someone to sell it to up here. They need someone to buy it from down there. It's simple. It's been occurring in the markets for decades, centuries. It's just how these things work, right? You need exit liquidity if you're a larger party trying to offload your position after a 23% reversion from the lows. And that's exactly what happens, right? We see they fizzle out into May OPEX, right? I did position myself short here. We had the gap down. Just like the market doesn't bottom on a Friday, it doesn't necessarily top on a Friday as well, especially with the gap down being those after hours moody news. Continue to take some ads. We had the lower high of expiration. See a really nice leg lower. I capitalized short side, and then I kind of mismanaged the position personally. Instead of, cutting at the 581 spot, seeing the kind of weak bid and intraday lower high and trimming some here for 100%, I ended up cutting it all here, taking ads off 581.47, and then getting trapped in the gap up over the weekend, right? Bad new exposure short side nonetheless, but ended up breaking even on the total short. And then I positioned myself short last week. You had some dark pools layered up here. You had the gaps filled. And I broke even essentially because it was a short week. We had the NVDA report, and we also had this notable after hours move off the tariff court ruling where we were up to 598. Faded the entirety of this move, right? The entirety of this move. Bid the NWOG and then kind of chopped around the rest of the week. Not chopped around, but didn't really get too far, right? We bid the NWOG, rallied a little bit, and then now we're here. But you have the notable exhaustion, the notable seller at this high of last week in the dark pool layered gap, and the expiration high, and then the kind of potential for this to be a UTAD up here, right? Obviously, a UTAD is only going to be defined as a UTAD if we, see the falling price action cooperate. But the massive kind of, when you see all this good news hitting up here, China news, NVIDIA double beat, court ruling, blocking tariffs, and you have all these people buying and getting bullish, 23% from the highs, just now flipping bull. It's very notable that those parties, those hands are being changed and they're being trapped, right? And you're seeing a larger seller up here. But this is going to take a little bit of time, right? Something like this is going to take a little bit of time. It's not going to just happen right off the bat. We don't have such a notable footprint yet. But, last week I positioned short on July. Was looking for this NWOG that is a phantom print, right? Which is that dark pool. There's a large order down there. You can't necessarily determine the intent behind it besides the fact that that's going to be the draw. This could be, a bidder bidding it lower. This could be, a draw lower and that seller presses it a little bit. We see a little bit of a draw lower. But came in all cash into the week, nonetheless. So, when I look at the month of May, it's just very minimal opportunities for me. There was one long that's maybe appealing on the 31st into May, but that's on a quick GDP gap down, not really the high or low I wanted, and into some earnings reports that I'm not really going to try to speculate on. If you get that 545, that 466 entry, that's kind of viable because you have a good amount of leeway into those reports. I just don't know if I justify it. I really don't. I wanted a little bit lower into that window, and we never got that, right? But what this does set up is a phenomenal short, I think, in my opinion. We start to see the volume, the kind of exhaustion from buyers, a 7% week, and we're getting a little bit of increased volume on a shorter week on the 27th, on the 19th. Obviously, there's a clear kind of larger seller up here and a notable exhaustion from buyers, and I think that just aligns with the way a lot of the names look. So we do have June flows returning next week, right, which is a little bit speculative. I don't know how aggressive these flows are going to be. I'm definitely looking short this week, and I'm looking short next week, but I do think that a much more appealing short in terms of a actual top can occur into July. I think that the way you look at banks here, right, we're seeing the notable exhaustion. We're seeing the notable seller up here. We're seeing the lack of aggressiveness behind buyers. We see a nice leg off of this gap fill, this previous area of distribution within the chart, these 2024 highs. You see a nice 4% leg. But, I compare this to this range in quarter one of this year, where it takes a little bit, right? We wipe the buyers off the lows, right? There's a bidder, we establish a new high. Here he is again, and he's kind of failing to get a lot of progression. An aggressive seller at the highs. That buyer is wiped for, at 50.74, and we see the breakdown, right? But this takes a little bit. We have 1, 2, 3 highs sold off. Doesn't happen just like that, right? And then for such an aggressive move, it's going to take a little bit for those hands to change. It's not just going to happen off the bat. It's going to take a little bit for those hands to change. It's going to take a little bit for an aggressive cause to be built out for what I think is going to be the short in terms of, 51 to 47, right? Similar to this like 10% move from the highs. It's going to take a little bit to get that extensive of a move, but you want to look short right here. Like I said, I shorted it. I began positioning around 590. Took some ads into 595. Caught a really nice 20-point fade. Attempted it last week, didn't see what I like, and I'm looking aggressively short this week now. However, my vehicle has kind of changed. I'm very focused on NVIDIA, which is just a major red flag overall. We see the breakaway gaps. We see the kind of last hurrah on this name, in my opinion, and then we see the distribution begin to play out the week of the midweek of the 12th, right, where we begin to see that larger seller, the kind of stalling at the highs, kind of trading in the confines of this range. The Wednesday print giving you that aggressive leg lower, the fill of this gap prior to the report, the in-log, the passive selling, and the run-up into the report, where we see that gap fill again, or not gap fill again, I guess you could say, but we see the gap failed again at the deep sea candle. We see the February highs taken out, and then July 2024 highs at 140 are just very pivotal. There's a larger seller up here. There's a lot of relevance and intent behind this range, and you don't really need such an aggressive amount of volume on a report like this, on a candle like this within this range. It's just one of those things that there's a lot of relevance behind this range, and you're seeing a nice leg. So I don't really want to short SPY this week. I will short this under 586. This is kind of my weekly outlook. If that path of least resistance is established, I think we do see 579, aka that in walk and a dark pool. And we could potentially see a little bit lower into this gap, right? I would love to see this 564 gap filled before June 16th, the week of June apex, and then we can see that spark a rally to like the 600 range, kind of propped up by those shooting flows that could potentially give us that look in terms of a clear UTAD, right? Because I personally think that this hasn't developed such a notable footprint. Obviously, you look at futures, and there's a big aggressive wick failing at the highs on both of these indexes, or both of these indexes. But I would want a more notable push higher off of June flows. I want this gap to be filled and then that high to be sold, personally. But as far as this week goes, we do have data Thursday, Friday with the ABGO report that I think can capitalize on via the NVIDIA report. But this is just a very notable weekly wick, right? Like this happening at this point in the chart is notable. There's not such a large amount of changing of the hands at the lows that's going to spark a new high and outweigh the cause built out at the highs, right? We have an aggressive cause being built out, in my opinion, since March of 2024. A lot of selling at the highs and a nice reversion trade from the mid 80s, upper $80 range. But is that really, anything that I'm going to think could push you aggressively to new highs meaningfully? No. Especially when this is the sequence, when you see the run up into the report, into this area of a larger seller that was previously active up there, and then we see the notable seller on the 21st, and then we see the failure on the report. I'm not a big fan. So this is my focus for the week. For this kind of distribution, I think this could be your UTAD. I think that these events, these earnings reports, similar like you see in November, offer you a ton of counterparty liquidity, offer you a ton of people that buy off the double beat and the good news, and a larger seller takes advantage of that. And with this previous area of distribution within this range, I think that this can push you 125 in the next week. My focus this week is trading this lower high. Even if you pull your fibs here, it's the same general range, 138, 139, 140-ish. I think that you can capitalize this. My first target's going to be, if I can execute within this $1 to $2 window to 131, a potential for a new low to be established here. Potential for a new low to be established. I'm going week by week here because, like I said, I think that this could take a little bit of time to build out a clear top. I do think NVIDIA could have topped up here off of this report. I don't see why it wouldn't be able to. just with the relevance behind the deep seek gap. But my focus here is just essentially this week is short side, right? And it's short side NVIDIA to 131 with potential to take this to sub 130s. And if that happens, I think you can definitely get a breakdown from this report to the 120s, maybe even all the way to 125, maybe a lower high into CPI next week, and then push this all the way to 120 maybe before those June flows kick back in. Right, we have CPI next week. I think that can be a big one. It's a big reason that I'm kind of looking short this week, looking to cover and then reposition, because it would make a lot of sense to me if we can get the short-sided trade this week, a little bit of continuation higher into CPI, and then maybe that can be a catalyst that could mark us down. I could sit up here and build out a large position short. I don't really justify doing that at the moment in time. I more or less justify taking this one step, 1 week at a time, and just waiting for a window. I think that can be a little bit more vulnerable. I don't want to speculate, but I think that can be the play, right? So QQQ is obviously a little bit different. We did fade the high on Thursday, right? That's very appealing to me. We had a notable aggressive seller. I mean, we had the same thing on SPY, but look at the volume here. And we're now pulling into your golden pocket territory at that 523 spot, that weekly high that was faded last week, and the daily high that we've kind of failed to base as well. So that's something that's very notable for me as well. I think that you can justifiably take a short off 523, risking down on a daily perspective on a couple weeks out and trading this to 509. My focus is NVIDIA, though. I think this is just more vulnerable with potential to establish a new low. I think that the contracts are a little bit better, and I think that with QQQ and SPY, I can take the path of least resistance through the previous week open to that weekly close and potentially a little bit lower, right? We have dark pools as well at 488 on QQQ. This is something I would love to see. Like I said, what I'm kind of looking for is this, maybe establish a new low, and then like a lower high here into CPI, and we can get an aggressive move that fills these gaps, sparks the reversal higher. Maybe it's like a really hot print, and a lot of people sell off that, and that kind of changes the hands into flows. I have no clue. But definitely looking short this week, and NVIDIA is my main vehicle. The more I look at it, I think it's justifiably the better short on the market right now for potential to take this to sub 130 before the week ends. And then I'm going to look for the same thing next week, right? Like I said, if we can get, break down, maybe establish a new low and then a lower high, I'm going to look again, SPY short on quarterly expiration and take this to 564. It's my target before June flows return. But I don't know. The flows could be shut down. We could relatively stay stagnant. The flows could flip negative, which I don't know if that's going to be the case. It's a lot of speculation for me now, and I'm just kind of being patient, taking it one step at a time. Because, like I said, this is a short for me, right? This was a long 20% lower. I capitalized, missed out on the third and final leveraged exposure entry that I really liked, and now we're seeing the hands changed, the selling occur, and just a redistribution inside of a distribution, right? A redistribution inside of an LPSY, in my opinion, right? And I think the 600 spot is going to be viable as well. This is a big time focus for me, short side, and something I think, quarter 3 will be the vulnerable window in my opinion, and then maybe a quarter 4 rally. XLF is a big one. A lot of the individual equity within this sector looks very poor, but it's one of those things that needs time. Schwab, this is a notable distribution developing here ever since the October report, but also a notable distribution that's occurring ever since the bank crisis. It's one of those things that this is a distribution within a distribution where you have this highs being sold off, you have the higher lows giving you weak progression, and it's going to take a while. I think we're kind of in our UTAD phase. I think this was our UT with our historic volume on these two anomaly prints. That sparks the nice leg lower. We see the reversion trade on the October gap fill where I think this daily distribution began on your preliminary supply, buy, climax, reaction, UT, sign of weakness, and then your UTAD. But, this is going to take a little bit. And I think it's going to be a timing thing. I think similar to how it aggressively sold off in the beginning of March, we can get something similar in July. And I plan on being very aggressively short August or September bank puts. I don't know if we'll make a new all-time high. Potentially. That would be very lucrative sequence to me. To the 40 $48 to $47 range. I think that's completely vulnerable. I think the JPM looks very poor as well. I think there's a distribution on JPM beginning quarter two 2024 when Jamie Dimon himself said he's not buying back any equity up here, and they're more than likely selling it. And you see that at the highs, and you see the UTAD develop within this range, and it's eerily similar to the sequence over here in terms of money rotating out of equities after an aggressive move off the lows. Except this is a little bit more extensive in my opinion, and I think something big is going to happen in 2026. I genuinely do think that the more this develops, something big is something going to happen. And a lot of people that ever since COVID are used to these only higher, right? Obviously we had 2022, but a lot of people are used to only up, 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 up. I think a lot of people are going to get eaten alive, and I think it's going to be a wake up call for a lot of investors and a lot of traders that that's pure speculation, but it's just an opinion of mine. Visa, notable selling at the highs, notable stall progression, notable volume pouring in. MasterCard, the same sequence. Wells Fargo, very similar sequence developing in LPSY. Goldman Sachs looks very poor as well. It's just, and that May 12th gap up was a very big red flag in terms of everybody getting bulled up, and it's very notable for me in terms of the rotation out of a lot of these risk-on names and a lot of equities in general. I genuinely do think that when I look at a lot of these things, I look at like Bitcoin, like I see Bitcoin potentially developing something similar to the 2021 to 2022 top, where we see the rally to the new highs, we see the higher low, the stalled progress at a new all-time high, and then we see a pullback lower than anybody expects. I would not be surprised to see Bitcoin cut in half in 2026. I mean, I'm not going to take any exposure on that, but I think that this is something that's very notable, and a lot of people don't understand how these markets move. Especially with all the crypto reserves, the Donald J. Trump fund, and just all these news catalysts are very notable to me, and I think a lot of people just completely ignore them. Personally, you have a lot of names, like I said, NVIDIA. This is a notable distribution. I capitalized here into here, capitalized here, I capitalized here, and I do plan to execute this week a potential 5 to 7% move on NVIDIA. A very ugly looking chart, ugly looking weekly chart. Microsoft. This is one of those names that was a great long in April, off 350, off the previous highs that were absorbed and based. A phenomenal long-sided trade, right? Especially when you have the unfilled January gap, and you have just the need for this to revert to the mean, right? Like you're going. A stock like this, a name like this, is not going to leave this 6% gap unfilled. You're going to see a reversion into that range. You're going to see the draw be to an area of a larger amount of supply, and you even see the preliminary signs and the sell climaxes built out through March. The relatively stronger sequence on Microsoft, but it's one of those things that on a name of these. Hold on, I gotta buy some NVIDIA puts soon. On a name like Microsoft, you're gonna have the reversion. You have the footprint and the consolidation, and it's that report that catalyzes it, where you have a lot of volume on a relatively uglier looking closure, filling the gap or pulling into the gap fill, and then we see the continued selling at the highs, which is very notable to me in terms of the failure to pull into the gap, higher low, strong harmonic volume pattern, and whatnot. You just see the continued rally higher and the notable sellers within the tape up here, and kind of that ugly looking closure on the 19th, and then the low volume consolidation where there's just no real aggressive bid. It's more or less just a passive seller, right? Which is kind of what happened last week, right? We had that passive seller the entirety of Tuesday's session, right? Where it was that gap up over the weekend on a low volume holiday week, but we had that passive seller not really showing his hand too much, and then the gap up, and we kind of fill that gap fill and tag that dark pool print that sparks the leg lower, and then we get. I mean, it's just all panning out so appealing to me in terms of the sentiment flipping up here, in terms of the way that a lot of equity looks, and a lot of red flags overall. The meta chart. I think this is a LPSY developing here as well. I think that this began to distribute following the January or February report that marked up 20%. I think that we haven't seen any new lows established, any new campaign built out. I think it's a lot of selling at the highs here and here and here and here. And then the aggressive, rally. This was like going on like a month-long streak of closing green up until the 18th. If I'm not mistaken. Yeah. This closed green every day from the 16th of January to the 18th of February. Not a daily candle closure that did not close above the previous until this 3% day. There's a ton of hands that change on that. And the aggressive leg from 740 to 480, the consolidation, the underperformance notably this week, and then the rally that, off the report, this is a redistribution within a higher time frame distribution with gaps to be filled below it at, sub $400. This is one of those things that this made a move from $80 in 2022 to 800. Moved 1,000%, almost like 900, 700%. This is insane. Like, people don't understand that the rotation into this happened at the lows with the notable volume, and now we're seeing the exact opposite. It's insane that people don't understand that to me. And the range you're seeing out is very reminiscent of a redistribution beginning on this report, more or less. And leading all the way into the May 12th exhaustion, and kind of stall, the pullback in the gap. And then now we have the potential this week to see a second high sold off, right? If we see a new high, it's been 12, 13 trading sessions if it happens tomorrow to establish what I would think more or less would be a very minimalistic new high at the rate that this is moving. The weekly print is giving you that exhaustive look. And I think that, this can couple along with the short side focus that I have this week as far as, okay, Meta can fade the highs, pull back into the INWOG from last week, right? And potentially develop a lower high that pushes us further into this gap prior to the June flows for a potential third high sold off. We have the earnings gap as well to fill. Very unappealing chart. Very similar sequence in Tesla. This was a great buy, a great long-sided trade at, $210, $220. 70-80% lower, pulling in the October gap, seeing the notable volume anomalies pouring in, and just seeing the clear-cut sign of a buyer. I wouldn't make this my long-term buy on Tesla necessarily, maybe this area within the chart, but we still have the October gap to fill. But you see the footprint, you see the notable signs of a larger buyer, weakness of this 350 or 284 election gap seller, and then we see the rally higher low, and it just gets exhaustive, right? Beginning the 12th, you see the notable larger seller up in this range, and it's just one of those charts that's not appealing to me. You have large sellers at the highs. You have a nice leg that occurred last week, a relatively ugly weekly candle closure. Nothing I'm going to execute on long or short, but a big red flag overall for me. Amazon's the same thing. We reverted from the 150s. We're in the 200 range. We're seeing that exhaustive seller on the 12th, and that very, very ugly weekly candle closure for the week of that 12th as well, right? Google's one as well, 140s to 170s. Phenomenal long at a March 2024 gap fill to begin the week of the 18th. The absorption of a very notable amount of volume on this print. They bid this, and you see the rally higher into that news starting to hit, right? And then they kind of sell it to you and there's a larger seller at the discount, and the gap fills and the progression gap reclaims, right? Apple's one that I would like. I would not be surprised to see the push into the July window. And Apple's one that's big, a big reason why to me. In terms of, this is a distribution, in my opinion, that began here on the June Worldwide Developer Conference. We see the continuation, the aggressive seller, the breakdown into August 5th. There's not a lot of volume on that. Look at the volume on such a notable candle. A 7% gap down to begin the week. 9, actually, insanity. The rally higher, no new lows taken out, stalling at the highs. The UTAD into the December flows, into the year flows leaving. Breakdown, LPSY off the report. Ended up seeing the digestion of that report, and then the aggressive leg lower and massive footprint on the gap fill from the April 2024 report that I just don't think, with the way that this looks and is building out following such a notable sequence, is going to be the bottom. If this were the bottom, I would have wanted a nicer structure, right? Not, a gap up, a seller in this 10% April 2nd gap, a notable failure prior to the report, a stall in the gap, breakdown lower. I would have liked a much more harmonic pattern coming off of these gap attempts, and it's just not the case. But we still have the 224 spot, right? We still have a 10% draw higher that I would love to see into July, because if that happens, I think it sets up a great short, and I do think that that could be the draw. But a much higher time frame distribution. I mean, you could even say that this began in July. I did actually trade this to new all-time highs, made like $100. Don't want to toot my own horn. First trade ever. Apple calls July all-time highs. AI news. Fuck with you, boy. But nonetheless, it's one of those things where a lot of confluence is building out. XLP is kind of looking nice right now. I can't. Well, not the best, but you're seeing some of these XLP names maybe outperform in this window. And just a lot of tech names look very disgusting. I don't really want to be the guy to like call a top. Energy could outperform if we pull back into this gap. You saw a really nice buyer here. But once again, just the consolidation, exhaustive gap up and leg lower. It's not ready yet. Just not like I look around. I look at like Palantir. This is a distribution that began in November following a move in 2022 lows from $6 to 120, 130. There's much more here than a lot of people realize, and I just don't think they understand how the stock market has moved for years and years and years in terms of buying low and selling high. And it's easy to say that, but I feel like a lot of people don't understand that the buying that was going on here was at $5, and now they begin to sell you it at a profit. There's a notable beginning of the end of this rally in November and December, and you see the February report kind of be that climax, that aggressive leg lower, and now we see the rally in April to May. That just gives you that gross look. I don't like this bull flag up here. I think there's a larger seller in this range. I think this is a developing UTAD. And this is one of those things as well that I have a hard time comprehending the timing aspect of this, just because I don't know how this builds out, right? I think that while this looks very poor, I think the stall at the highs can push us lower. This can be our UT. I would like to see a nice leg off of a UT and then a potential UTAD. I think that you want to see a 1, 2, 3 higher high distribution. So it all depends how aggressive this leg can get into June flows, in my opinion. The June flows are speculative. June flows can get shut down. But I'm going to go on a limb and just a system that, the majority of the time that window is going to be relatively less vulnerable short side than the window preceding and following that, preceding and succeeding that, for me, right? Risk to reward execution wise, especially on vehicles like options where you have to trade against time. That can be your that can be beneficial to you, but can also be detrimental if your timing is off, right? If your timing is correct, you can capitalize and it can work wonderfully. If your timing is off, you can get chopped up and end up losing money on a trade that was, good. Obviously, it's not a good trade if you were early, but on an idea that was good, but the execution was off. So, like, this is a really aggressive leg, and you just don't see, you see nice volume here, and you see a nice leg, but it doesn't really outweigh the volume that occurred on the 10% day on the 19th. It doesn't really give you that look, in my opinion, that is it's not, like I said, similar to NVIDIA, it's not a cause that's going to outweigh the effect built out up here. I think it's going to need to draw lower. I think we will see $60 within the year on Palantir, so it's a 50% decline from where we're at right now. I think we'll see 40 to 45 within 2026, potentially lower. It's one of those things, though. I think this is our preliminary supply. This is our buy climax, our reaction, our UT. I want to wait and see how this UT develops. I would love a leg to $90, but it depends. And Hood's another one. The same simple concept. 2022, 2023 lows. This was sitting at $7. Now it's at 70. And it's in this gap, a couple weeks after the IPO. We're seeing that a lot of these distributions began, in my opinion, after the election. A lot of people began to get bullish about equities. 60% from the 2022 lows when Donald Trump got elected. For whatever reason. Now, political beliefs aside, people were posting, this is the best stock market ever. You're too late. I've said this before. If you're buying off of the election, you're too late. If you're selling it off of tariffs, you're too late. And if you're buying off of trade deals, you're too late again. And if you're selling off of the 2024 Japan carry trade, whatever it was in August, you're too late as well. Another climax off of the February report, aggressive leg lower, and then the rally just unstructured, unappealing, and the draw being to the highs where you see that larger seller again. And you can quite literally see him here. Even today off of rip, he was pretty aggressive. This is an aggressive 2.5% candle, and we do end up rallying and drawing back into this range. But this is, just part of what you're doing here is understanding the auction. There's always buyers and sellers. You want to understand, sides get trapped, sides bail, sides move their orders lower, higher. There's always buyers and sellers. What we're doing here, reading the tape, reading the price action, understanding the volume, is understanding, how those buyers build out positions, how those buyers absorb a lot of the supply and wipe that supply dry so that, when that campaign is established and there's nobody selling it in that range, the draw is higher. Where's the draw going to be? Gaps, liquidity, highs, right? Areas where there's larger liquidity and money built up and there's the potential for a notable seller to be. Now, obviously, that buyer could wipe that seller dry, could push higher. That's the interpretation and the reaction that comes with a lot of experience. Same on the seller's perspective of things, right? There's a larger seller at the highs, offloading his inventory that he bid, 700% lower. Capitalizing on these binary events, these catalysts that offer those weak hands and the late buyers off the reports, and trapping them. And then you see buyers within this range. He just moves his asks up. Like, there's a larger seller within the range or the gap that we're pulling into. It's just why it's selling off his inventory higher and it's wiping the area of demand so that the draw on the path of least resistance is established. And when that path of least resistance is established, you'll see those lower highs, those last point supplies, and you'll see the draw be to $20, in my opinion. Pretty simple. Nonetheless, though, it's how these markets move. It's how hands change. And like I said, what we're doing here is interpreting the behavior and the aggressiveness or lack thereof, these two parties, right? The buyers and the sellers. There's weak hands and there's strong hands. There's informed and there's uninformed. There's larger parties that front run these reversals, whether it be one way or the other. And then when they're taking their profit, whether that be buying back what they shorted, whether that be building out a position that they're attempting to front run in, they buy it, they wipe the supply. That's the bad news hitting that people sell off of. Now, if they bid a position lower and they want to offload their inventory, they wipe out the demand, they sell off the highs. There's that good news that hits, and they same if they want to short something. It's a pretty simple aspect. You can determine the strength of these parties. Just look at the price covered over time. 109 days, 74 trading sessions to establish a 2% new high. Where I bet if I come back and check this weekend, you'll see a relatively notable seller. If all things go how I would expect them to, off of this area, right? And it's just understanding the strength, understanding the aggressiveness, understanding who's in control, understanding the effort put in and the results seen, which kind of couples along with the volume and the candle structure, in terms of, is a seller, is there a lot of selling going on that's getting little to no effort? If so, that buyer is probably absorbing that supply. Is there little effort from a seller, but a good amount of result? That means that buyer is probably bidding it lower, and then vice versa for buying. But I don't know, man, just a lot of red flags, the progression stalling, the aggressive legs. Like I said, when you see this climax and then the aggressive leg that corrects itself from 55% from the highs, that's very appealing. That's what you want to see. Obviously, you have a like 80% reversal here, 130. But understanding, how this acts in comparison to the previous year-to-date highs, and just the relevance behind the what happened here, and what it was propped up by, which was flows and short coverings. UNH, this is one that I'm focused on, but I'm not. It's not ready yet. This is going to give you a trade like CrowdStrike in terms of the panic selling um, from the highs off of that bad news, and at some point that supply gets absorbed, those hands change. There's you know value found in CrowdStrike from a party in the $200 range. Obviously, the August 5th print was very, very notable. Like I said, meaningful for a lot of charts and a lot of names, as well as the sequence, the window of the August flows, um, as well. I guess that was quarter three, but as well, that was a lot more meaningful than I think there will be any candle that we get um, anytime soon as far as a reversal, unless for some reason we get a massive sell-off that happens within the next couple of weeks. This was very meaningful. And like I said, just like I said with size getting trapped, there's a lot of, after such an aggressive run on CrowdStrike, right? 83 from 2023 lows to 400 2024. There's a larger seller up here. It happens off of the quarter four report from the 2023 fiscal year, and off of this report as well. Not this report, this news. And you can see the distributive structure begin. Right? You can see the kind of campaign being established, and then the aggressiveness of this selling occur off of that news, right off of that kind of shutdown news, whatever it was, the bug. I think it was that kind of shut down Microsoft. Um, I want to say, I don't know, it was a while ago, a year ago almost. But what happens here, right, is those profit takers are showing their hands. There's a lot of people selling inventory. Um, and they most likely, the party that was distributing this completed their campaign, offloaded their inventory. They definitely probably didn't get the fills that they would want, but it was more or less a panic sell. And at some point, right, specifically this Monday, July 22nd candle, at some point, all of that selling from the people that were fearful, that were holders of CrowdStrike, begins to change hands, right? Because for somebody to sell, somebody has to buy, and vice versa. And all this selling that occurred here, all of the selling began, you can see with the volume, right? And I bet if I break it down intraday, I bet if I could look at the 5-minute chart here, it would be very similar to the April 4th intraday move on indexes that just occurred recently, where all the selling that was happening was from the weak hands, and the larger party that found value at CrowdStrike down here, especially into that window in August and then into quarter four, was bidding this, right? You can see the spread start to die down. You can see that there's a larger buyer here, right? You can see, like I said, the spreads begin to diminish, the volume begin to, dwindle down, but it's not a solidified bottom. We see the gap down to 30th, another notable climax here. This is those sell climaxes where all that selling is being absorbed on notable volume, and then the spreads continue to dwindle down, and then the August 5th print sparking the rally, the pop, the higher low, and then that subsequent reversion to where, that party that bid it down here at 200 to 250 bucks began to distribute it in this range for a profit, in my opinion. And the same thing I think is going to happen on UNH, where you're seeing, a 50% correction. The historic volume pouring here, the highest volume week of all time, the week of the 12th. Here, the climax, the exhaustive gap that began to develop on an 18% day in the notable volume. I'd love to go see the intraday price action this session. Very, very reminiscent, bidding at the lows, but nothing necessarily ready. We see this notable footprint. There's a big, big buyer down here, 122 million volume on this print. A relatively appealing leg off of his attempts, 30%. But this isn't anything I would like. If this was a little bit more harmonic and instead of a 5% gap down, And then we see this kind of subsequent digestion on the small spreads, but this to me kind of signals a lack of aggressiveness behind that buyer to bid this gap. And I think the draw is going to be lower where sweep the lows. We have a COVID gap that's unfilled here from 230 to 240. But one of those names that I think can give you that crowd strike reversion up to 400 to 500. Just this is the only chart I would be long. More than likely equity to 400 to 440, but nothing I'm doing here yet as far as options. TSM is going to give us a great reshort. This is one of those names that, similar to NVIDIA, there's a larger distribution that began on March 8th, leading into June, leading into July. We see the aggressive leg. We see the rally off August 5th. Give you this distributive structure at the highs, the aggressive breakdown from 225 to 130s. We never bid the COVID low or the the August 5th lows, and then we see this reversion that's just, like I said, propped up the footprint, the buying that occurred here. There's a notable reversal, and now that seller is kind of showing his hand again. The window is approaching. The flows are there in June, but the May flows that were propping this up are no longer in the picture. And I think a vulnerability in terms of a short-sided trade on TSM is approaching again. Not anything. I'd rather short NVIDIA this week, but I can definitely see this 170, 165 into July, and it'll be a main focus of mine. ABGO is something I'm kind of watching this week. Another name, like I said, money's been rotating out of these semiconductors, these quote-unquote leaders, for a while. And it's just a big reason is just the extensive moves off 2022 lows. I mean, 1,200% on NVIDIA. 500% on ABGO. There's parties that front ran that when everybody was fearful, Ukraine, inflation, that found value in those stocks, accumulated their positions, and then we see the rally where they're offloading their inventory, in my opinion, on a lot of these names. Mainly beginning in quarter one of 2024 with kind of the preliminary signs of a weekly, monthly distribution. Potentially. I don't want to get too speculative here. I don't have a good outlook for equities this year. I don't have a good outlook for equities next year. We'll see. I don't really want to look that far ahead. But more or less just spotting the overall red flags. After, like I said, an easy market the past 5 years. A very easy market where a lot of investors were accustomed to just constant returns. But like I said, ABGO, we see the report in November or December. Stall, the notable weekly volume. I want you to just take a picture of this and look at where the volume pours in at. Right, the volume pours in the week of July, the all-time high failure. The volume pours in the week in December, the all-time high failure following the report that sparked the leg from 250 down to 140. Right, yes, you have some volume here. Look at how this kind of is that divergent rally, exhaustive rally. There's under the hood. There's sequences and things under the hood that are propping this rally. You can just see that seller start to show his hand up here, and I think that this can be the catalyst for NVIDIA this week, whether it be on a flat open, be on an all-time high failure, be on a gap fill. I think this can be a catalyst this week. Personally, I think this is a very big red flag as well. I don't want to speculate too much on that overall bearishness, but it's just something that I've been keen to notice in terms of the moves made off 2022 lows. It's something that I've been very keen to notice. The rotation out of a lot of equities happening in quarter one of 2024, specifically financials and semiconductors, which those are the two largest sectors in SPDR, and then NASDAQ 100 index is obviously just tech names. A lot of these names don't look appealing to me, and a lot of these names have a lot of room lower, but it is a timing aspect. I think quarter three is going to be really bloody. I'm going to get really aggressive short these next 2 weeks and probably lay off the gas into July, where I'll begin to focus a little bit more on banks, where I'll begin to focus a little bit more on TSM and NVIDIA, and less focused on SPY and QQQ, which just the options chain is very liquid, right? But I like names where it's a little cheaper to take puts that are closer to in the money of my target. Like this week, if I'm looking for 523 as my entry and my risk, and I move to 509, I don't necessarily. Let me see like what July 20th 509 puts are. They're $500 each. Whereas with NVIDIA, I can take like a couple dollars. I can take the 128 puts, get like 10 of those for $1.3 each. Capitalize here and trade a little bit lower. So that's my focus for the week, and that's just kind of my May recap. Right, there was a phenomenal. I guess you can say generational. I don't want to say generational. I think generational of. I think of generational as COVID lows. I think of generational as 2008 lows. I don't think of generational as 2025 lows so far. I think a generational opportunity in terms of great spot to get long exposure. My main focus would have been a lot of these names. SPY and QQQ, obviously. We never really retested the 2022 highs as well, but my main focus would have been the NVIDIAs. Obviously this is a higher time frame distribution, but you're going to have a snapback rally. Never touched this February 27th print. And a relatively important spot in the August 5th lows. Microsoft and Google. Those would be my three longs besides SPY and QQQ. Off of the 2021 highs, the highs that were broken and based, the gap fill on Google, taking out these lows from September, just important spots within the chart and notable footprints that gave you the subsequent digestion and the draw higher. It's simply how supply and demand works. You already have the preliminary climaxes being built out on a handful of these names, and you have the notable footprints in digestion and the draw being higher to an area where there's a large amount of supply. There's not enough supply down here, right? There's not enough selling down here. There's a larger party bidding this and all the selling being trapped, and now it's the reverse, right? There's always going to be buyers and sellers. You want to understand and comprehend the behavior and the strength of them and where the draw is going to be in terms of supply and demand, right? It's pretty simple. Anything else? I don't really think there's anything else. I don't really think there's much else. That's really just my May recap, my outlook for the week, my focus for the week being NVIDIA, and then SPY and QQQ under 586 and 516 respectively to be NWOG fills. And my focus going forward is really bearish. I'm not afraid to say that. I'm really bearish going forward. If I had a shares portfolio, the only things that I would hold are NVDS, SQQ, and SQQQ and UNH. I think QQQ and SPY and NVDS make new lows late quarter 3, mid quarter 4, if not quarter 1, quarter 2, 2026. Those would be my long-term trades if I'm going on a shares port. And then, like I said, UNH to the $400 to $500 range, but I think we see a little bit lower first. This will be a focus of mine long into June flows if the market is propped up. If we fill that gap, establish like some internal structures, I'll take some calls on this. But yeah, I think that QQQ and SPY make new lows. Maybe not this year. It would be a little bit surprising, but would it? I genuinely don't think so. That's a 30% drop in equity prices, or 20%. That's really not that surprising. As far as a shares port, going for a couple of ideas every quarter, every month, every year. Right now, I see nothing that piques my interest besides UNH reversion trade, leverage exposure, short side ETFs. I think NVIDIA might have topped here. I think that this trades to a new year-to-date low. I think you can trade this potentially to $70, which would give you a 150% return. On NVDS, I think QQQ as well trades a new year-to-date lows just based on how this is developing. It's like 8%, 9% month. I think the long trade was great here. I think the long trade on commons was the phenomenal opportunity. I do think that this window was a little bit better leverage exposure on options because of the compression and digestion of volatility. But I also think that the long trade is over, and we are in the stage of building out a redistribution. I don't want to say would not be surprised if QQQ makes new highs year to date. That would not be the most surprising thing to happen. This isn't, SPY, you had, a couple sets of distribution at the highs. QQQ, you only had one failure. I would not be so surprised to see that, but I do think that this pulls back to new lows, whether it be start of quarter 4 or not is completely dependent on how this summer goes. I don't want to speculate too much on that. That's not really my job. But if I personally do not see any reason to be long anything other than short side leveraged inverse ETFs in UNH the entirety of the year. So that's my quant. That's pretty much it. That's the. Is there anything else that I wanted to talk about? That's just the May recap, the June outlook, why I think that the redistribution is occurring. The trades that I've taken the month of May that were very, very minimal. All I did was buy puts, and it only really worked out once in my favor. Nice. I mean, it worked out here, but not like I would have liked it. The relevance behind the August 5th candle, I talked a little bit about that, how I misread the entire situation. I was able to comprehend it a little bit over here, but I wasn't able to execute how I would have liked to. Yeah, that's pretty much it. May market talk number 3. May recap, June outlook, redistribution, quarter 3 shorts, August 5th, UNH, UNH Palantir Hood, right? When you have those leaders looking extraordinarily disgusting, it's a big red flag. But yeah, I mean, that's pretty much it for me. So this week I'm looking to position, I'll go ahead and say it, I'm looking to position NVDA. I could start taking ads now. I don't really feel like doing that. I think I can get 138 to 139 as my ads, and I think 523 on Qs is going to be that window. This is my main focus from here to here. I'm looking to cut the majority of my position, probably 2/3, and maybe, just maybe, establish a new low, and then re-roll it next week. And then QQQ and SPY, if these gaps are wiped, I mean, this was the 3rd attempt off of this 586 spot on SPY, and you're not really seeing the cleanest follow through. I mean, we're still failing the new week opening gap on SPY. Yeah, this does not look the best. We're still failing the new week opening gap, and QQQ's in that discounted lower high range. Under, a break and base of 586, I'm trading this to that dark pool there in a week out, most likely. So that's my focus for the week, solely and purely that.